Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is September 26th. We are going to take a look at a REIT out of the real estate sector, Extra Space Storage. Now, before we get too far into the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Hit that subscribe button. Don't lurk in the shadows. I know there's a lot of you out there who watch the channel who aren't subscribed. Go ahead and hit the subscribe button. Join us today. Hit that notification bell so you're notified whenever we put out any new content. I do this Stock Pick of the Day series Monday through Thursday whenever the market is open. I do miss a day from time to time, but for the most part, it's every day that the day is open except for Fridays. I take some time with the family on Fridays. And watch the videos to the end if you would. Watch time is another one of the metrics, along with that thumbs up button down below, the subscribe button, and the notification bell, and drop a comment as well. YouTube looks at all of that criteria to spread the videos a little bit further, so doing all that really does help me. And a special thank you to the subscribers and the viewers of the channel. You guys are awesome. Really do appreciate you taking the time to spend some time with me today and other days as well. Now, this is the Vested Interest Stock Screener. This is how we are going to run through the video. We're going to look at this criteria as well as some others, but this is really the initial screener criteria that I use. Thousands of companies out there in the stock market. This is a way for me to go through them pretty quickly and just make a quick decision whether or not I want to do more of a deep dive into the financials of the company. If it meets 5 of 8 or 6 of 9, then I add it to my watch list and do more of a deep dive where I look at the financial statements, income statements, balance sheet, make sure the company is financially sound, and then I do a discounted cash flow analysis and figure out what I'm willing to pay, and then and only then do I add it to my buy list. Now, jumping back over to Extra Space Storage here, check them out at their homepage, www.extraspace, that's www.extraspace.com. That is where I pulled this information from. Extra Space Storage is the largest operator of self-storage facilities and the largest third-party self-storage management company. Since we were founded in 1977, we have grown to include more than 3,500 locations across the country from our headquarters in Salt Lake City, Utah. We help our customers to a better tomorrow by providing the most convenient, secure, and professional storage solutions in your neighborhood. Whether you're experiencing a life transition, storing for your business, or just needing room for more, we hope to give you the peace of mind while we keep your belongings safe. And that's really what they are, right? You need extra space to store some things that you don't have room for. They will definitely rent you some storage space. Now, the reason we are taking a look at them, down 2.61% on the day. We are talking about Extra Space Storage, ticker EXR. This is a REIT out of the real estate sector. Closed out the day at $176.61. Looks like they're up a little bit in the after hours when I pulled this information, at least. 52-week low, $101.19, and 52-week high of $184.87. So they are closer to their 52-week high and not even close to being within 15% of a 52-week low. Market cap on this one is $38.951 billion, a beta of 0.87. So they are just slightly less volatile than the overall market. PE ratio seems a little high at $48.25 per share, though for REITs, you really want to look at funds from operations. That's a comparable metrics to PE. EPS, earnings per share, sitting at $3.66 per share. Earnings date coming up October 29th. Forward dividend is $6.48 on the year. I believe they're a quarterly payer. We'll see what they pay per quarter here per share in a little bit towards the end of the video. Yield of 3.57%. Very nice starting dividend yield here. Ex-dividend date was September 16th. They are going to pay out on the 30th. You would not be in line for the next dividend if you were to buy them now. You'd have to wait a few months. You needed to buy them on the 15th or before to get the 9/30 payout. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from, $174.13. So they actually see it coming down from where it currently sits, according to Yahoo Finance. Jumping over to the right, we're going to take a look at dividend yield theory to see if this one is potentially presenting any value. To do that, we look at their 5-year dividend yield average of 3.24%. We compare it to the current 3.57%, or over here where it says forward annual dividend yield, 3.57, same number. Since it is higher than their 5-year average, that speaks to some potential undervaluation here. Now, payout ratio, I like under 75%. This does look very, very elevated, 149.45%. But again, for REITs, you really want to look at funds from operations to see how they are shaking out. This does not mean as much We'll treat it like a regular company that we look at. I like 75% or lower, but for REITs, they're required by law for one to pay usually 90% or more in dividends. And it does skew some of these numbers whenever they're making acquisitions and that sort of thing. So keep that in mind. That payout ratio on this one, you really want to compare to funds from operations, similar to the price to earnings ratio. It really does. These metrics aren't very good for a REIT. Now, free cash flow, though, we still want growing free cash flow, because typically if a company has growing free cash flow, their finances are in good order. They should be raising that dividend to go along with it. Now, it doesn't necessarily mean some things. Maybe they're using the cash for reinvestments in the company, buying back shares, making acquisitions. That's some of the things that they can do as well. But you'd like to see if they are paying a dividend, a growing dividend. At least I would, a growing dividend if they're having growing free cash flow. Going back to 2021 here, you can see $948 million in free cash flow, 2022 up to $1.2 billion, 2023 up to $1.3 billion, and trailing 12 months so far up to $1.7. So that is nice, steady free cash flow growth that you want to see. Repurchase of capital shares, not so much back in 2021, but it looks like a very significant portion in 2022. A little bit more in 2023, 67 million in 2022, 5.3 in 2023. Not really doing a whole lot so far in the trailing 12 months. I don't know if that 377 is still part of the 2023 numbers. We'll have to wait to see how the rest of 2024 shakes out. Now, jumping over to stockanalysis.com, I always recommend more than one source. Stockanalysis.com is one I like. Yahoo Finance is another. You pick any sources that you like. Just make sure you're not blindly following just one. Sometimes information is inaccurate. Sometimes it is not updated. So I like to look at two so I can make sure I'm getting accurate information. And sometimes whenever I don't get two pieces of information that line up from two different sources, I go look at a third or even a fourth. Now, they do have 15 analysts that have taken a look at this. They call it a consensus buy, but I will tell you this. When I did look at this, and if you were to go to stockanalysis.com, you could click on each one of these tabs, see how many call it a strong sell, a hold, a buy, or a strong buy. And when I look at this, of the 15 analysts, actually 6 had it a hold, 2 had it a sell, none had it a strong sell. I think 4 or 5 had it a buy, and a 2, I believe, had it a strong buy. So I'm surprised that it's still right here. It seemed like to me there were actually more calling it a hold or a sell than there were calling it a buy or a strong buy. Again, go check them out at stockanalysis.com. You'll be able to see how many of this 15 are calling it each, and tell me what you think about that. Now, they do have a low estimate of $141. That would be a 20.28% decrease from where it currently sits. Average estimate, pretty close to what we saw with Yahoo Finance on the previous page, $170.93. That would be a 3.36% decrease from where it currently sits. And if it hit their high of $204 estimate, that would be the only way you make any money based on their estimates here. And that would be a 15.34% increase. All the while, you could collect that 3+% dividend yield. Statistics here, I like return on equity and return on invested capital. Two metrics I look at, I like 10% or better there. Return on equity, 8.83%, not hitting the 10% that I like. 4.72% is also lower than the 10% I like for return on invested capital. So no check there. EPS growth, I like 5% or better forecasted over the next 5 years. They're sitting just below that at 3.93%. So no check there either. Revenue growth, I typically like to see in the positive. So I'd like to see what they're forecasting. They don't have it listed here. So maybe someone, if you do know any other sources that you have out there, have any revenue growth forecast for this one, let me know in the comment section down below. Now let's look at the dividend history before we wrap this one up and go back to the stock criteria here that we were looking at early on. They are quarterly payers. We talked about payout ratio again, elevated. You really want to look at funds from operations, so don't freak out. Realty income, if you looked at it, is a REIT as well, and if you look at its payout ratio, it's extremely high as well, and always seems to be. Dividend growth is 1.89%. So they are growing, but they're growing slowly. Growth of 14 years, so nice to see. Now, I don't like that their buyback yield is negative. That means they're buying in inopportune times. They're not waiting for their stock to be undervalued. Shareholder yield negative as well, 41.99%. That's not a good look. You want positive shareholder yield, and I'd like my buyback yield to be positive as well. They do pay out on the March, June, July, September timeframe. March, June, September, December timeframe. That must have been a special. Yeah, must have had a special dividend payout there at some point. But looking back here in time, going back to June 2022, they were paying $1.50. They kept it $1.50 till March 2023, up to $1.62. Yeah, that July one must have been a special payment. Or maybe, I don't know, because they're down. Then they dropped. Well, I don't know what's going on here. They dropped down in July 2023 and then dropped down. Well, it looks like that's pretty close to the 162. Maybe they broke out that $1.62 payment into 2 months. That's weird. I don't know why they did that, but back to 162 in 2023. So I'm not sure. Are they growing the dividend? It looks like it's been the same, $1.62 since 2023. So I'm questioning that dividend growth. I'm going to give it to them because they're saying they're growing it, but going back to March 2023 and the most recent 162, it's the same number. So it looks like they're not. Maybe they're planning on the next December payout being the growth. I don't know, but so far that's the same payout as June 2023. So that's a little over a year. All right, let's run through the screener here. Understand the business, check there. That's where we always start. And unless it's just a very difficult business, which storage space is not, most businesses get a check. Growing free cash flow last 4 years. Yes, actually, very nice to see. Nice, steady growing free cash flow, actually. Growing dividend. Yes, it says it's growing, but I'm questioning that a little bit. So if you didn't give them a check there, I wouldn't be upset with you. Dividend payout ratio, no, it is not under 75%. Check valuation. Dividend yield theory says it's potentially undervalued. It is not within 15% of a 52-week low. The return on invested capital and return on equity, neither one was over 10%, let alone both of them. And earnings per share growth was under 5% projected that I like. So only 1, 2, 3, 4. And like I said, if you were to take away the dividend growth there, I could see how it could only be 3. So this one will not make it on my watch list. Let me know what you think of this company here. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below. Let me know what you think of the video. Let me know what you think of this storage company here. Is it one in your portfolio? Is it one you're watching? Is it one you're looking to buy? And if so, what value do you place on the company? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like this you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it in the comment section down below. I'll work it in the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in the presentation should be considered financial advice. I am only sharing my opinion and investing for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research and best based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.